Good morning and welcome to another edition of From the Desk of Dan White. We usually start with a market update, and at the risk of being a total gloom and doom, the U.S. stock market is on track for one of its best years ever. It's up roughly 25% in 2024. This is coming off the heels of a plus 20% gain in 2023. And if it were to surpass 20% in 2025 for 3 straight years of 20% plus gains, it'd be only the second time in history. It happened in the late 90s leading up to the dot-com bubble. So everything's great. Despite all the signs that you've heard me talk about over the last 3 to 6 months, the U.S. stock market chugs on. But I'm going to go over some of these signs again because every sign is screaming recession, correction, everything else. So one big problem, the future earnings outlook for stocks is trending in the opposite direction. The consensus analyst estimates for next year's S&P 500 earnings peaked in July and have been trending downward. As of today, analysts have increased their expected earnings for next year by just 1%, compared with a 25% gain in stock prices. This means that virtually all of the gains in the S&P 500 this year have not come from expectations of future higher earnings growth, but rather just from investors paying more for the same amount of earnings. And based on the current consensus among Wall Street analysts who are calling for $272 in earnings per share for the S&P 500 next year, the index trades at 22 times forward price to earnings ratio. That's right at the valuation level where the market peaked in November of 2021 and just 12% below the 25 times forward multiple reached at the height of the dot-com bubble. And when you see stalling earnings and rising valuations, corporate insiders are cashing out in a big way. The ratio of insider selling to buying has reached 6-to-1, or double the average of the last 3 years, and the highest level in over 2 decades. When this ratio has reached such extreme levels in the past, it has provided an early warning indicator of market turbulence, including when it reached a high of 5 times in late 2021, just before the 2022 bear market. And it's funny, while corporate insiders and Wall Street analysts wave the caution flag, retail investors have never been more euphoric. The latest data from November's survey revealed that 56.4% of consumers expect higher stock prices in the year ahead, setting a new record high for the second time this year. So that's one sign, and then we'll look at the deficit, right? We're still spending money like a drunken sailor. The U.S. budget deficit soared to $258 billion in October, one of the biggest monthly deficits of all time. Debt as a percentage of GDP has increased to 121%, the highest level in U.S. history, excepting the statistical blink of the COVID-19 shutdown. Debt to GDP has doubled since the 2008 global financial crisis. And this is amazing. Federal deficit spending has ballooned our debt by $27 trillion since 2008. So that means in 16 years, the debt has grown up by $17 trillion. So Elon Musk and Ramaswamy and the Department of Government Efficiency certainly have their work cut out for them. All right, what else do we got? Small businesses are getting crushed. Small businesses in the U.S. have seen their sales drop for 29 consecutive months. Deterioration in earnings is even more abysmal. Small businesses employ 46% of American workers, 59 million people. So small business struggles are a big red flag for the broader economy. And as we noted recently, the restaurant sector, a key small business employer, is on track to post the highest number of annual bankruptcies in decades. And it's becoming more challenging for consumers to access credit, which will slow spending even more. It's kind of official. The small business recession is already here. And then one last thing, and everybody thinks Donald Trump is riding into office on the white stallion, is going to fix everything. And Trump knows America's economy and our society have been warped by progressive politics, and he believes correctly in the American people. Restoring our property rights by reducing regulatory burdens and slashing the cost of government will allow America to grow out of its debt burdens and restore a broad prosperity to the middle class. But this is where reality distortion comes into play. He's kind of blinding his supporters into thinking that this is going to happen without major dislocations in the market. And unfortunately, decades, whether it's Republican, Democrat, we're not getting into that, but decades of woeful financial management have left our country more at risk than ever before to an enormous debt-fueled economic collapse. Witnessed the huge rise in bankruptcies this year. What's most at risk? The U.S. consumer. Credit card debt is up 214% from $350 billion in 2008 to a record high $1.1 trillion today. Auto loans are up 100% from $800 billion in 2008 to a record high $1.6 trillion today. Student loans are up 200% from $600 billion in 2008 to a record high $1.8 trillion today. So as employment declines, we've seen 9 straight months of declining employment and consumer debt defaults mount. There's a rising likelihood of massive consumer debt default. And as Trump moves to cut government spending and steps up efforts to collect on student loans, there's going to be a big decline in discretionary spending. In fact, it's already begun. As I mentioned, restaurant sector is on track to post the highest number of bankruptcies in decades. So Trump's move to cut government spending will also impact a lot of businesses. So all this spending is going to come home to roost. And all that being said, the market rolls on. And then yesterday, Jerry Powell kind of said he's not going to keep putting alcohol in the punch bowl. You know, the Fed did cut rates a quarter point yesterday, but then he said that, forget 4 cuts next year. There's only going to be 2 cuts, and the market reacted very poorly. They went down 3%. The Fed is kind of between a rock and a hard place. I mean, they had a dual mandate, inflation and unemployment. So with the economy doing as well as it is, I mean, they shouldn't be cutting rates. Inflation's going back up. They ought to be raising rates. But the problem is the government debt. The government cannot afford paying high interest rates on $37 trillion. So that's why they've been lowering rates, because the government can't afford the interest on the debt. So there we have it. That's your market update. I'm not saying sell everything. I'm not saying get out of the market. Bull markets can go on far longer than anybody even expects. But I think, as I've been saying for the past 3 to 6 months, it may be time to use a little caution going forward. All right, moving on. Google reviews from Middletown, Glen Mills, and Lewis. We really do appreciate the people that have gone online, have Gmail accounts, and can give us a Google review. If you have a Gmail account and you haven't had the opportunity yet, you can give a review for Middletown, the guys down there. You can give a review for Michael down in Lewis, or you can give a review for our client service staff, our Medicare specialist, Kirsten, or Allison, or I up here in Glen Mills, and we would really appreciate it. In January 14th at 1 p.m., I'm going to be hosting an afternoon seminar at the WMGK studios. We've been doing a little advertising with WMGK. We hosted a seminar there, about a month ago, and we're doing a second one on January 14th at 1 p.m. So that's a great opportunity for you to refer friends to join us in the afternoon and become eligible for our next referral event. We're going to provide lunch. Then there's going to be a lot of giveaways from the WMGK team. So if you've got somebody that you want to introduce to us, that'd be a great way to do that. I want to give you our Christmas office hour updates. We will be closed on Tuesday, December 24th, Christmas Eve, and Wednesday, December 25th. And we will reopen at 12 p.m. on Thursday, the 26th. So we're going to take Christmas Eve and Christmas Day off, and we'll be back at it on noon on the 26th. And in closing, I just want to wish all of our clients out there a very Merry Christmas and a Happy New Year. We want to say thank you for the business, for the friendship, and we look forward to a great, fantastic 2025. Merry Christmas, everyone.